65, they're not working for money anymore. The business is their life. It's what gives them purpose every morning to get up, and they can't imagine selling that business even. They don't want to sell that business. It's what drives them, it's what motivates them, it's what inspires them, and that business can't sell, generally speaking. You see a variety of other reasons here why we see small businesses don't transact. Lack of investment in technology is a big one. I guess the other one I wanted to point out is that financial records, the importance of having good, clean financial records cannot be understated, and I think Michael will probably harp on that a little bit when we get to non-business. Next slide, please. These are statistics of the 170 or so businesses that Viking has transacted in the last 5 years by age group. And what you see is we really drop off above the age of 70. And again, that speaks to those older business owners who have a lifestyle business that they do not intend to sell. And the prior information by generation. Most of our business owners over the last 5 years have been baby boomers. That fraction is decreasing though, as we see that average age of business seller in that 56, 57 year range. That's not Gen Xers, those are not baby boomers. And then finally, a couple of conclusions, and these are more opinions than conclusions, I think, Eric, on the next chart. This is me as an individual speaking, and having seen what I've been able to see working with business owners through my work at Viking Mergers. We believe that we are, as a society, kind of at the Silver Tsunami. Those of you who are fascinated by the mechanics of a tsunami, tsunamis typically happen when there's an earthquake deep underwater out in the ocean. It generates an energy wave that, as it approaches the shore, gets bigger and bigger. That energy wave, when it's out in the middle of the ocean, may only raise the level of the ocean an inch or two. So it's very difficult to detect a tsunami when it first starts. So in a similar analogous way, we may very well be at or near the crest of the Silver Tsunami now, or in the next couple of years. In terms of baby boomer sellers, again, more and more baby boomers are at that older age of the spectrum of business owners that will not sell their business because it is their lifestyle, it is their purpose. And then I'm hoping Michael can talk a lot about business buyers, because finding good buyers is a challenge for a business owner. It's very difficult. And then last but not least, I'm going to reflect back to that reason why we see so many business owners in that 56, 7, 8 year range selling their businesses. Typically, these are good Main Street businesses, a lot of trade services, plumbing, electrical, HVAC companies. A business owner has started and grown that business over the course of 20 or 30 years. They find themselves in their mid-50s. They've built a lot of value in that business, and they're still young enough to do something else. We have one business owner we're working with right now, just got remarried. He wants to sell his business and spend time with his new wife. One business owner told us that he wants to sell his business because he wants to take a year and ride his motorcycle around the United States while he's still physically capable of doing that. So these are not retirement decisions, which is typically what people think of when you talk about an older business owner selling their business. These are lifestyle choices that business owners are making so that they can take advantage of both the value they've created and the time that they have remaining to enjoy some element of life beyond that business. So those are just a few topics I wanted to toss out there. I hope they generate a lot of good questions for our panel. What do we have next?
Okay, so there we go. I'm going to pitch this to whoever wants to take it. What does a great deal actually look like?
I'll take it. There's a lot of alignment that has to happen for a business acquisition to occur. We tapped into a little bit of already, right? These are performing businesses. These are cash flowing businesses. These are owners who they've already done it, right? They've already kind of got to the top of the mountain, and now they're seeing the view from up there and realizing what else they can do for their own personal goals. And so the challenge really is there on finding a buyer who's really credible, and that means more than just I've got money for down payment, I've got good credit, I've got collateral to put up if I have to finance this, right? It's the operational skill sets. It's the experience in the industry, right? And so I think, a good deal is one where there's harmony on both sides. There's balance, right? To mitigate the risks of a business that's humming really well. It's got its own systems going through a significant transition. An owner stepping down is a big deal, right? You have to be able to retain employees. You have to be able to retain clients. You have to be able to keep those systems operating and moving. And this is we call it a tsunami for a reason too. It's kind of applicable to the transition here as well. So a good deal is one where, you've got a company that has been able to have really strong systems, prove it through its financial statements, and then a buyer who is ready to be just plugged and played seamlessly. Lenders can get creative and have a lot of solutions. We have a lot of solutions at Mountain BizWorks to close any shortfalls that may be there for lack of liquidity for a buyer, lack of collateral for a buyer. So it's important that if you are interested in looking at a business to not underwrite yourself out of an opportunity if you're looking at your own, buyer profile, for lack of a better word. Use your resources there. So I would say a good deal, a business that's ready to sell, a buyer who's ready to buy, and a buyer who's willing to lean into systems of support around them to make it happen.
Okay, great.
Well, I was going to just say something about BATNA, and that a good deal can only happen if you have a BATNA, which is the best alternative to a negotiated agreement. And so it's kind of like you're up at the altar and you're getting ready to get married to your new life partner, but you've got a couple of good options back in the back of the audience, keeping them on the back burner just in case, keeping them warm, just in case, because you don't ever know, and it keeps the deal moving forward, whether it's time, terms, someone can get cold feet and just be like, I'm out. And we had it happen to us at Green Sprouts a number of times before we actually transacted. When we would go to the altar, with someone, a one-off person, a one-off deal, we had it happen, 5 times over 20 years. And it was just it was just this high and low of oh. And so always have a good BATNA.
Okay, I love that. So I'm going to pull up your slides next. And can you talk a little bit about what businesses need to do to prepare to sell? There we go. We got the business.
Well, Chris and I are part of this group called the Business Owners Success Collaborative. And one of the leaders of the group asks business owners, do you have an asset or a job? And I think that's a very interesting way to think about a business. Or a job. Do you want a house to go take care of and maintain and clean up after the guests come and go? Or do you want to hire someone and create systems to have that happen while you enjoy the benefit of the cash flow, right? So it's do you want an asset or do you want a job? If you're always running your business as if it is an asset, then it can become an asset to someone else. If you're running it like a job, then the likelihood that it will just close upon your departure is very high.
I pulled up the business value calculation example. Do you want to explain this a little bit?
Oh, sure. So on the slide with the QR code, there's an adjusted EBITDA worksheet. And it's super simple. It starts with your, regular formula to getting to your EBITDA. And so you would, take your top line and subtract out what it costs to get to your gross profit. And then you take out all your overhead. And then you have your income before taxes. And you're going to adjust your EBITDA according to pushing things through their business to optimize for taxes. So if I have a business and I run it out of my home, I might pay some of my personal home expenses with the business. And so I would want to add those back to my EBITDA in order for it to look more realistic. If someone else were to take this business and run it as a going entity, they would, they would get the benefit of those perks as well. Conversely, if I have been underpaying myself a sub-market salary, I would have to then gross that up to match what I would have to hire a general manager to do my job if I'm running my business as a job instead of an asset. We would have to gross, so you'd have to subtract that out of your adjusted EBITDA in order to get a more realistic picture. So that's what that worksheet is all about. It's just like a quick and dirty way to get to a number. And then the wild thing about EBITDA multiples is that, like, over the history of time, they have kind of stayed in the range of 3 to 7.
Yeah.
And that's across 18 industries. There are 2 industries that stand out. That's like utilities and mining because of geographical monopolies, and technology. So 3 to 7 is what everything else that makes or sells something trades in, the range of 3 to 7. And that's 25th to 75th percentiles.
Okay, nice. Great information. And when we get to the end, we'll go back to that slide so people can scan the QR codes and download these worksheets. Chris, what kills deals most often?
Small companies that are run and built and run by a founder that's looking at selling would sell to another individual for an enterprise value up to about $5 million. That's kind of the ceiling we see for individual buyers getting into a business. Above $5 million, you're exceeding SBA lending thresholds, and typically those deals are transacted by buyers who are strategic buyers, operating companies, or private equity groups. So anything below $5 million when an individual a buyer and a seller, 2 human beings. What are human beings? Highly emotional creatures. The nice thing is, and I like Emmy's analogy of coming to the altar, because it's a very highly emotional situation, and it's a lot of emotion drawn out over an extended period of time. On average, when we list a business to close or to sell, it takes about 8 to 9 who's trying to sell their business, who still has to run that business, and a buyer who has to jump through a lot of lending hoops and qualification hoops. It's tremendously stressful for all parties, and there's not a deal that doesn't get done that at one point or another, one or both parties were ready to throw their hands up and walk away. So what kills most deals is just it's lack of awareness on the part of both buyers and sellers of just how tremendously emotionally stressful this process will be, and stay focused on the goal. There's and grow that new business that they're purchasing, but there's a lot of stress and a lot of emotion over the course of that transaction. And that, in my opinion, is what kills most deals.
Michael. For someone buying their first business, what do they most always underestimate?
That. I mean, seriously, I'm going through it. All the risks are mitigated from a creditor and debtor perspective, right? It takes time. Underwriting takes time, and I think we're talking about this business buyer accelerator. We're looking at how do we help the transition of these aging businesses, and we look at our biggest competitor in the space being seller financing. Why? Well, because it's 2 humans who can just get together in a room, make a deal, shake hands, put it on paper, done, right? As opposed to having to go through formal underwriting, maybe to do that, red tape, right? And the longer that a transaction takes, the more stressed out people can get, more antsy they can become. Is it going to happen? Is it not? Is the lender going to be too scrutinous? There's a lot of question marks, and so being able to frame that expectation really is just so crucial. Just like, this is going to be a journey. We all just strap in, ride the waves, get through the turbulence. This plane will land and we'll be okay. Most times.
Okay, for somebody that's looking to buy a business, what are some types of businesses that are being overlooked right now that could be great?
I'll wade into these waters a little bit. Looking at a buyer who's another individual. I'll say that one of the consistent themes that we've heard from buyers in recent months and years is
I've heard about this AI thing, and I don't understand it. And either a buyer will embrace AI and approach us about a business that could be very much into the AI space, or take advantage of AI. On the flip side, most buyers are looking for a business that is resistant to the pressures of AI, interestingly enough. And that's also true for a lot of private equity groups. We see a lot of private equity groups buying into trade services companies because last time I checked, AI has not figured out how to fix a leaking pipe or fix some wiring in a house. So any kind of business that has a high component of human interaction and capital involved in its operation seem to be ones that are very attractive to a lot of buyers. Now, one thing at Viking, we don't do like small retail and restaurants. It's just not good fits for us. Typically work with those kind of business owners. I think just the nature of our economy here in the region, we do have a lot of really good retailers, restaurants, a lot of outdoor business related groups that could be very attractive hidden gems for prospective buyers.
Anybody else have anything else they want to add to that?
Kind of complementary to it, less about what industries might be hidden under a bush there, but more about kind of like the mindset of how a business acquisition can be a real asset to you as a business owner. It's not just I think it's easy to kind of put it into this box, like this thought of just like it's easier to buy a business than start one, right? But it's also a great tool to expand your existing business. When we look at professional service sectors like accounting, there's significant consolidation that's happening, and some of it is larger, private equity consumption, but it's also some of the independently owned firms that are just saying, okay, there's a mom and pop accountant who's getting ready to retire. There's a quality book of business, and they're in a rural market. Yeah, let me go ahead and buy that up because that's it's cash flowing. It becomes a new asset for me, and so I think for folks, I saw the hands go up. We have a number of sole proprietors here. If you're looking to figure out a way to creatively expand your business, acquiring a industry competitor can be a really sound way to do so. So I think mindsetting for prospective buyers is a big thing with this. There's a tremendous amount of opportunity that's here already. Discovering it is a challenge, but think of it as truly like possibly the next phase of growth or possible scale for your business.
I think that for us at Green Sprouts, having sold to a company who's like they owned another business, that we can manage the inventory and manage the product life cycle, and it'll be easy peasy. What they didn't understand was that like adding sizes and colors into the mix was a whole different ballgame. That apparel and footwear is like a whole different ballgame than coffee cups and lunch boxes and stuff like that. And so just, I mean, for me personally, I have no desire to manage inventory anymore. And I have no desire to manage like a one-to-one service providing kind of method, trying to think about businesses that are scalable beyond that sort of one-to-one.
Then we're going to kick it to the audience. So I know we've looked at a few businesses to buy and gone to the table, and there was a co-working space that we were looking at, and it was the price tag they put on it was tremendous for the revenue. So most owners assume that their business is worth more than it actually is when they go to sell. What is the biggest gap you see between what owners believe their company is worth and what the market will actually pay, and what drives that gap?
Well, okay, this is a toughie because one of the hardest things that we do when we do a business valuation for a business owner, when we present that, almost every time that owner is getting some bad news because they think their business is worth a lot more than what it is. And that's understandable. That business owner is emotionally attached to that business. They've built it, they've run it, they've grown it, they've hired people, they've dealt with customers. It's very emotional, it's very personal. And only that business owner knows all the blood, sweat, and tears that were put into building that business. When it comes to buyers and lenders, whether it's from a buying, investing perspective or a lender's perspective, a lender has to make sure that that business will cash flow the loan that a new owner is taking out to acquire that business. So, for all you business owners in the room who think your business is special, every business is special. But it's special to you in a way that it's not special to a buyer and a lender. And so just, we work with business owners all the time to say, temper your expectations. And we prefer working with business owners who have a long-term perspective at transacting their business. And meaning they're not looking to sell it next week or next month. They're looking to sell in 2, 3, 4, 5 years. That way they have an idea of what their business is worth today, how the market puts a value on that business, and there are certain things that they can do inside that business over the next few years to increase its value and attractiveness to the buying community and the lending community. And I know that's what Emmy spends a lot of her time working on.
One of the things that I was thinking about doing before I sold Kid Cycle Club was to buy a bike shop and sort of like create this, this strategic synergies of like, okay, I can have a location and share some expense and, and have some cash flow that'll, support another business and grow the two together. And I was doing all the cash flow analysis for this business, this bike shop, and I was like, if I pay X amount of dollars, I have to be able to recoup that money and then get a return on top of it that is greater than if I put my money in a mutual fund over 5 years. I can't. It's a higher risk. It's illiquid. It's I have to be there running it, so it requires effort. Thinking about a business, whether it's a startup or whether it is a new, a business by acquisition that you want to run, it's important to think about it as if it is an investable asset and you're comparing it against your BATNA.
Let me slide up here. Okay. My last question is, if you were wanting to buy a business or sell a business, where would you go to look for this? There's buy, biz, sell. There's like things online. Are those like Zillow?
If you're not familiar with Biz Buy Sell, it is essentially Zillow for businesses. Businesses of all sizes, shapes, styles, characteristics are advertised for sale on Biz Buy Sell. And typically a business broker will be listing one of those businesses for sale. We use Biz Buy Sell as a platform for all of our listings at Viking as well as our own platform. That's a good place to start. Is that you may have sellers who are not contemplating selling, but they may have a business that's very marketable. And you have buyers who are interested who don't know where to start. And that's the first thing is this. If you're looking at buying a local business, get involved, network with primarily other business owners and the people and professionals who support those business owners. Or they ever talk to a business broker. So know professionals in the market. Let them know that you're looking if you're a prospective buyer. I have a good friend who spent a couple of years looking for a good business to sell, and he just let folks in his network know, or to buy, but he let people in his network know he was looking to buy a business, and ultimately it was successful. It was a business that was never marketed on Biz Buy Sell. It was never marketed publicly. But because there was somebody who knew that business owner and knew somebody was interested in buying, they did a little matchmaking, and it worked out successfully. It's a challenge. I'll tell you, as a buyer, it's a challenge. Most sellers we work with, all of our sellers are doing so on a confidential, customers, suppliers, partners. So how does a buyer find that willing seller? Again, networking is a big part of that. And then groups like Mountain BizWorks are starting their new BBA program. I sincerely, as somebody in the business, hope early and often about potential businesses for sale, because right now there's not really a marketplace in an informal sense. The only formal market for most small businesses is Biz Buy Sell.
So that's the long-term vision for my new company, Inkai Platform, which is that it become the Zillow of your small business. That people, it's an easy way for business owners and advisors, and then start working to increase that valuation by doing very tangible things. And then eventually there'll be a little toggle on and off to say, would you like to hear what other people think the value is of your business? Would you like to hear from prospective buyers? And then, sort of have the slider of anonymity come and go as you please as the buyer, as the seller. So.
That's exciting.
All right, let's kick it to the audience. Who's got a question?
Hi, thank you all for being here today. I know two of you, and I'm excited to know more about the third. But just out of curiosity, for people that are interested in buying and also for people that are interested in selling, specifically, what are the red flags that tell you I should run away from this business, and how can we cover those up and hide our crazy as business owners?
Go ahead, Michael. You get first crack.
I mean, we've kind of touched a little bit on some of these, in our conversation so far today. I'll start with sellers because it's much easier to identify red flags from a business that has historical financials to analyze and deep dive, right? Same red flags as it would be if that company was asking for lending, right? If it's not cash flowing, we've got a problem, right? More times than I wish was the reality of it. Do we have a buyer coming to us? They've got soft agreements in place with a seller, and we ask to collect financials from the seller, and either last year's P&L is really incomplete. The balance sheet, we're not working with quality numbers now at this point to be able to make an informed analysis as to whether or not U.S. one of the biggest hurdles that we face all the time from a seller perspective. Other red flags, from a seller basis would be, again, leaning into the underwriting. If there's, character flaws within management of that selling, business, then okay, you as a buyer, you need to know that culture before you step into it. How are you going to tackle that? Is there a way to tackle it, or is this a burn it down, build up type operation here when this on our exits? Red flags from a buyer. Well, let me finish real quick. The potential chasm that could be there from the valuation of the seller and the reality of what's really what. That's also a big hurdle. Okay, red flags for a buyer. There could be, that's okay. That during a lending intake. No, I'm kidding. Just playing. Again, we look at underwriting from a business cash flow, but then also a personal borrower profile, right? And so, the same standards as if you were to add, come to us for borrowing history with creditors. Okay, that's important for the obvious reasons. Do you have the experience with this business? I've encountered some conversations before where, for example, this individual wanted to buy a vineyard, and I asked, "Have you ever worked on a vineyard?" They said, "No."
How hard could it be?
How hard can it be? I enjoyed the end product of the vineyard, so I should be able to fit right in. Yeah, I mean, there's some common sense things that, those are big red flags. But the rest of it, again, it's just working with people and making sure that, we have alignment, we're on the same page, and that members can be full of expectations.
Has trucks, has buildings, has equipment out the wazoo, they're wanting to sell. And then a modern internet type company, they don't have anything. They have let's say they're making the same amount of money or even more. They have a website, they have a social media presence, they don't have anything. Both are wanting to sell. What are the differences? Is it harder? Is it easier for?
What do they do?
Pardon?
What does the new company do?
Let's just say a wedding company. That's what I have. But let's say, they have a huge amount of income, but their assets are their name, their website, their social media. They don't have concrete, tangible assets.
It's a service.
It's a service.
Okay.
But I mean, it's something that a lot of people can do, but they just don't have anything to say. Like, the bank can't look and say, oh, hey, you have a dump truck that's worth X amount of money, it depreciates this amount of stuff. All they have is a website, social media, and things like that. Is it easier, harder? What's the process? How's that going?
Okay, I'll wade into this one. I'll make a general statement and maybe get into some specifics. Again, I'm focusing on smaller businesses where you have an individual buyer trying to assess the value of a business. You know, how much does the valuation get determined by how asset heavy a business may or may not be? And surprisingly, the answer is not much. What's more important is the profitability and cash flow generating power of that company. You could have a wildly profitable wedding company with very few assets and a poorly performing construction company with tremendous amounts of assets. From a buyer and lender's perspective, that wedding company is far more valuable. Now, when it comes to asset-heavy industries, especially ones where assets are over a very extended period of time, and construction is a good example, very often when we're looking at those companies from a valuation perspective, we'll look at capital expenditures in terms of, is this a capital expenditure to replace aging equipment, or is this a capital expenditure in anticipation of future business? And those determinations can impact the business valuation. What's probably more important is when that business is transacted, how are those assets valued from a tax allocation standpoint? And that's an event, that's like the graduate program for this panel
MBA?
is talking about. When you get into a deal, it's not just a simple, here's $1 million for your company, but it's like, okay, well, how much of that $1 million is capital? How much of it is goodwill? Because those things are taxed differently, they're depreciated differently. Yeah, I mean, the deal structure and those things are a lot of mechanics that go into making a successful deal work. But just from a simple valuation standpoint, again, typically just a rule of thumb is the profitability and cash flow generating
I
power.
would also say that the valuation is going to hinge on what is the composition of the revenue. So is the revenue diversified or is it concentrated? So the concentrated revenue has higher risk and the diversified has lower risk. If your revenue is all from new customers every single time, that is also higher risk because you have to make a new sale every single time. So the buyer of your business can't just come in and like keep a business going. So customer base, do you have to do new customer acquisition every time? What is your, do you have one supplier that provides your services or do you have many suppliers? Do you have, is the business dependent on one person? Is the founder like, I'm the best salesperson here? Or, is there a team of salespeople that you can pass on to the new owner?
And they can continue to operate the business without you.
Hello, guys. Good morning. Beautiful, beautiful presentation. Lots of very thought-provoking thoughts and ideas. My name is Paul. I was wondering, what kind of advice would you guys have for that 80% who are single owners who are not, their business is not currently building in a way that will be sellable someday in the future? How can they start to create that? How can they start to think ahead and think, okay, when I'm ready to retire, when I'm wanting to move out of this business, how can I make sure that it's worth something?
Thank you, Paul.
Yeah.
Just very quickly, again, we're focusing on really small businesses with 0 or just a handful of employees to frame your question. A business owner probably needs, in that case, somebody to help them look at their business from a very objective lens of what's the real asset here. You may have, kind of going back to Emmy's point, is I have a captive customer base. I have built and maintained these relationships over decades, and there's value in that. Now, how to extract that value for a business buyer is another question, but it's really working with a business coach, a value growth advisor, looking at the business and saying, what are the really valuable assets here that can be transacted to another person who can then realize and build on that value. customer list. Maybe let's say a hypothetical business owner has exclusivity on distributing a certain widget in this region, and nobody else has rights to do so. There's value in that exclusivity. How to get that value out for a new buyer, that's another conversation. But I think it just starts with an objective conversation between that business owner and somebody who can help them look at their business to another party.
Okay, you guys, just so you all know, it is 9:58. What an exciting topic. So many questions. We could last question, or do you guys want to keep going? I always try and end and start on time, so I want to be conscientious of that. Let's take a vote. What, 5 more minutes of questions? All in favor? Okay.
And if somebody needs to leave, we won't be offended.
Yeah.
No problem there.
Hi. And I'm a bookkeeper for a living, that's what I do. And so it's on my mind a lot. And I wonder if you can speak to how surprised business owners are that they're financed and why that might happen and how they can be more involved in their own financials, because I think a lot of people depend on their professional service providers to give them good numbers, and that doesn't always happen.
Yeah, I mean, there's a lot of things that are outside of our control sometimes. If a business owner, modest operation, has been having their friend who's been a bookkeeper for a long time, just kind of, or spouse, family member, right? Our best, but ultimately it's one of those things where 1 plus 2 is 3, and so if the numbers are showing that, based upon the last 3 to 5 years of tax returns that we buy formulas, garbage in, garbage out, right? So if this isn't well packaged to be able to present the business having value display for,
Just say, taxes are not financial statements. PA or a bookkeeper, somebody to help them with their taxes. Business owner balance sheet and a P&L statement, and get that updated on a monthly basis, because I might want to sell my business in a couple of years. Yeah. And I know I need those things. We've got a lot of good CPAs and bookkeepers, controllers, accountants in this town.
There's a lot of bad ones too.
I'm not going to go there.
They're bad.
But no, it's important for business owners seriously considering selling their business. Invest early in getting those financial statements put together, because once they're put together, they're easier to maintain. Trying to do it retroactively, so I need to sell my business in 6 months, and I need 3 years of P&Ls and balance sheets created, forget it. No, that's not
The
gonna work.
same goes for your due diligence checklist. So I've created this outline. It's from both of the Big Path, who's based here, deal that they do, and so I use that as a framework to create one that, if you do it every month at the time when you close your books, then it's really easy, and it's just ready in a Dropbox, ready to go when the buyer comes a knocking. And you don't have to scramble around for 6 months like I did and find every lawsuit you've ever participated in, every news article that you've ever been covered by, everything good and bad and ugly that has ever happened to you. Go dig up.
And that's those QR codes that are right up there.
yeah.
And I did want to, go ahead. So Emmy was quoting you earlier, Leslie.
Oh, I did not come up with that. I
Well,
just
the
repeat,
team-
I heard her repeat good things. So, Emmy, you talked really quickly about business owner dependency. You touched on it really quickly. I want to give you all an opportunity to talk about how to begin transitioning and why it's important to begin transitioning the business from business owner dependency, and even talk a little bit about that 50% of businesses are transitioned out of in unexpected circumstances, and kind of what a business owner can begin doing to protect themselves against an unplanned exit.
Yeah, I'll say this with as much love as possible. I worked for a business founder for 15 years. She's my mom. And I am also a business founder. And so I would say the first step to getting away from founder dependency is a lobotomy. And then you can do things to create systems and processes to support the people involved.
What do you mean by a lobotomy?
It takes let go of things and push them out to other people and let them do things differently than they would. Because that is really hard for some people.
Yeah. Kind of a
Founders
tongue-in-cheek benchmark I like to use is when I'm talking to a business owner, ask them, when was the last time you took a week-long vacation? And if the business owner says, oh, I took a week-long vacation last year, I said, okay, this year plan on a 2-week vacation. And then next year, a 3-week vacation. Because if a business owner can put together the processes and support and people around them, that business can run 2 or 3 weeks without them, they're well on their way to having a business that's much more marketable.
That's a good point.
Last question, Bill.
I am Bill, putting a buyer and seller together about emotional ups and downs. And I heard you say that one of the things that you do is to try to reassure them that that's going to happen. And I'm wondering how you manage it during the process, because those are minds that could blow something up.
Yeah.
It's basically, how do you help them deal with the completion of the transaction?
I'll say having a prior life as a marriage counselor or some sort of mental health professional is very beneficial. But seriously, we find that quite often in the role that we serve at Viking Mergers is we have to be that calm voice of reason. We have to bring a business buyer or seller back to what is the goal here? And that's one of the things I heard, it was actually an M&A attorney shared recently. The reason that she likes doing M&A work is because you have
Fair market value of how they're selling that company, which is always a great start when we're trying to finance the purchase of that, and along the way, right, like we have the opportunities to reaffirm buyers who we're underwriting to say like, hey, there's a deal here. There's more due diligences that we have to do, but this is taking form in a positive direction. So that there are touchstones, there are times and benchmarks of development during underwriting and the formation of financing a deal where confidence is built. And I think again, if you can establish a really good expectation and relationship on the front end, it lets you build upon that along the way, so that those conversations become a little less turbulent and it's less surprising for folks when maybe something does pop up in underwriting where you're just like, oh, okay, well that was a non-recurring revenue event here last year. Well, we're going to have to put that in the formula, and that might affect how we value it now a little bit. So there's just good communication that's kind, firm, and consistent. That goes a very long way in these transactions.
Okay, very, very, very last.
Thanks so much, Erica. I just have a quick question and a comment, and also just want to say it's so refreshing to be back in Asheville. I've been back for a couple of weeks, and to be able to have a panel like this is just exceptional. My question is to Emmy. Love the business you have on your hands here, and was wondering if you would consider maybe having a finder's fee for a person like myself that's out in the world that could bring a deal potentially to the platform. Might you consider a finder's fee, something like that? And then my comment was, to the 80% number, and just, this thing that came to me about maybe presenting a mentor-apprentice type of relationship or structure to those folks, so that they're still immersed in the space of the business, but at the same time they're passing off, the baton to, a younger person. So just wanted to offer that.
It's a great question. I'm still working all the kinks out on the revenue model for the Inkai platform. There's like kind of a phase one revenue model of like selling the subscription to coaches and advisors, but then there's kind of future data-centric revenue models, and if you have ideas, I'm open to hearing them.
All right, I think this is proven. This is our first panel discussion of this nature, and I think that this has really proven that we got to do more. Let's go. It's an exciting topic, right? So if we can all put our hands together for our amazing panel today. And I want to give a shout out to all of our event sponsors, Charlie and Troy Ball, who generously donate the space each week, Hatchworks Co-working, Mountain BizWorks, Pisca Fund, NC Idea, Patrick O'Kane with EOS Entrepreneurial Operating System, the Hatch Foundation, Baird, the Brookshire Garside Group, ERC Broadband, Brit Creative, who does all of our marketing and social media, love it, Dynamite Coffee, Roasting Company, the best coffee in all the land, Broadbean Media, which is Brian, who is live streaming this up to YouTube right now, so you can rewatch. Western Carolina University and SCORE. So, coming up, and that's too small to read there. Let's see if I can get it here. I think one of the most exciting things coming up is the Mountain BizWorks Business Buyer Accelerator that begins on April 23rd, and it's a 6-week, 8-week class. I personally have gone onto the site and submitted a little thing there. Very exciting, and that's kind of the first time that we've seen that happening in our community. So it's good to dig in. Thanks for always being a great resource.
We're very excited about this opportunity, and it is kind of on the bleeding edge of how we really build a system of support, a landing spot for all of these businesses. So we're excited to be involved in this. You know, a lot of it's going to be around developing operational skill sets that really align with business ownership, right? It's one thing to be a piece of the puzzle, it's another to actually own and, you know, put the whole puzzle together. So we're thrilled. It's going to be a great cohort. Please sign up if this is something that you find out.
And then we have the Digital Nomads Leadership on Tap. That is happening here tonight. Adam.
Tonight, and our coworker here, Andrew Polson, is going to be presenting his leadership ideas around a totally different topic. It's the remote work of flexible workers. He's going to have a workshop going on in the event space. And can I squeeze something in that's happening also?
Yeah, squeeze it in. We can't fit it all on one slide. It's so many exciting things. We try and just do 1 week at a time.
Next week, Asheville Digital Nomads, there's a lot of stuff going on, guys. So next week, Wednesday, starting at 6:30, there's a Side Hustle Live, a comedy show for entrepreneurs happening at the Mule. It's a really cool event. There's a comedian's going to come in and it's going to facilitate cool pop-up, fun, levity, release the tension kind of stuff, and get ready for a wonderful event that's happening next weekend with Hatch This, which is going to be...
Yeah, I think they're going to get up and talk about Hatch This in just a second.
Talk about it in a second.
Yeah, come on up. Come on up. Next weekend. I feel. Are you guys going to do a dance? Oh my gosh. I just got really excited. Let's go.
Hello, everybody. It is that time of year again. We are bringing back Hatch This. It's on March 27th through 29th. If you guys haven't done it, it's a startup weekender. You come with an idea, and you never know. You might make it to Sunday night and win $20,000 of prizes. Jeff will be there, keeping the vibe fun all weekend. We have amazing food, awesome sponsors. Just a quick personal note, Hatch This. Oh, I'm Maui, by the way. I'm the chair of Hatch Foundation. I know I don't look it. I also own a dance studio, Euphoria Dance. But I came to Hatch This in 2018, didn't know a single soul in the room. Literally zero. Like I was a mom that just re-entered the workforce. So, and from that one weekend, it was like drinking from a fire hose, learning about how to build a business, a scalable business that someone will want to buy or invest in or maybe lend in. All in one weekend, and had the best time, and then just got connected to this amazing community. So you guys are ready. You probably come here every Wednesday and know folks, but if you know those who are not in this community already, they might have an idea, a little spark, invite them, bring them. We will have young people there. We will have old people there, all people of all backgrounds. It's open to the public, so it's next weekend, and Jeff, would you like to say anything else?
Anybody ever read a book and become an entrepreneur? No. Because you become an entrepreneur by doing entrepreneurial things. This whole weekend is designed to give you a, can I use this phrase, baptism by fire? Can I say that? I can. Oh, the Reverend's here. Reverend, can I say baptism, or we don't do that anymore? I can. It's like a bris for entrepreneurship. Bris by fire. So here's the deal with entrepreneurship. It's everyone ever like launch something and right before you hit publish on that website or send that email out, there's that like inner gut feeling of, oh shit, I hope I'm not crazy, or the self-doubt that creeps in, all that risk and the reputational risk you're putting on yourself. This is a weekend to eliminate all of that risk and be surrounded by immense support. You come in Friday night, you give a 1-minute pitch, you build a team, you work all weekend long. We expect to see some kind of prototype or more than a deck, like with all the AI tools out there, we expect to see some product. By Sunday night, we'll be at the Mule again. After you're there Wednesday night for Side Hustle Live, we're going back for the finals. So the final teams will present to a panel of judges and win a $20,000 cash and in-kind donation prize package. So this is everything you need to start your business. Or if you don't have an idea to start a business, but you want to see what it's all about, or meet people who want to start businesses, come to Hatch This. This is your chance to get deeply involved in the ecosystem, the startup community, the network here. You're going to get some real experience in entrepreneurship and have a chance to win $20,000. So hope to see you then.
We have incredible food donated by Birdie's Pizza.
Oh yeah!
Bear's Barbecue.
Woo!
Jamali.
No way!
Joey's Bagels.
Yes.
Y'all, it's gonna be incredible. We also have incredible mentors all weekend. These are people who are donating their time, some of which may or may not be on the stage, some of which may also be in the audience, and just in the Asheville community. So they'll be there helping you, supporting you throughout the entire weekend. Even if you don't have an idea to pitch, you can still come and join a team. And if you just have like a fun little idea that you've had zero, additional build behind, just an inkling, come and pitch it, because that one might be the one that ends up moving forward. It'll be super fun. We have these brand new t-shirts that look like the old t-shirts. But it's softer, and it's from Moonlight Makers, so we're stoked on that. But yeah, it's gonna be an awesome weekend, so if you or somebody else would like to come, please let us know. We have student tickets, as well as a call for volunteers. If you're interested in coming and volunteering for the weekend, you get a free ticket and all of the food. We also have an incredible speaker on Sunday night. We are so excited about this. We just found out this week. It's going to be the CEO and founder of NC Idea. Nope, not the founder, CEO of NC Idea. How do you pronounce his last name?
Tom Rue.
Tom Rue.
He has 2 H's in his name, both silent.
That's it. That's the one. So it's really amazing that he's going to come to our event on Sunday night and will be a speaker. So, and a judge. And a judge.
And a friend.
And a friend. All the things. Okay. Yes.
Tell about Sunday.
So yeah, on Sunday, you can just come to watch the pitches. So if you don't want to do the whole weekend, it'll be dinner, you get a free drink ticket, and get to see all these ideas that have been come through for the whole weekend, and there'll be a lot of energy for that. So it's 5:30 on Sunday at the Mule.
5:30 to 8.
Do you get a ticket at the door if you realize you?
No, Deb! No! No! Buy it online early!
Yes.
Early, you also could buy it at the door.
Sorry about that. I don't know where that came from.
He's energized today. He's going to break dance later.
Have a dance night. Yes. Thank you, everybody.
Awesome.
Okay, thank you guys so much for coming. Just to wrap up, I want just if everyone could give a big shout out to all of our volunteers who put this together. Everybody works so hard every week, and we have the most amazing team. So hopefully you leave here super energized and excited to go share your light with the world. Next week we have Jenner Deal, who is known as the Viral Girl, and she's going to be giving some insights on social media, hacks, trends, surfing waves in other ways. Waves and waves. All right, thank you guys so much for coming. Have a great day.
See you next week, Bill.